Good morning, folks. Just real quick, make sure you guys read the disclaimers here. It's important. Okay, just give me one more minute or two. I got to make sure I can get my time delay determined. I kind of warned you guys I'd be clumsy the first couple times. I haven't used this medium for a while. Just stand by a minute or two longer and then we'll begin. Okay, folks, good morning. Welcome to the Inner Circle Trader live session. This will be a brief one today, simply because I want to make sure I have a very small, short presentation, and then we'll go into a recap later on today. I'll post it to YouTube. Okay, first and foremost, I'm only going to be talking about cable. And you're probably wondering where that was last night in my YouTube presentations. I gave you optimal trade entry examples to study. It's meant to get your attention on finding them in price action without knowing what they look like in advance. You'll never see them before the fact, or at least real time, which is necessary, obviously. Unfortunately, for profitable trading, you got to be able to see it, not look at it in hindsight. So today I want to talk about the effects of optimal trade entry, how you can anticipate optimal trade entry before it even forms in the chart. And I'm going to try to do that in about 30 minutes. So we'll break at 8:15. Right now it's 7:44 a.m. So I've got about 31 minutes or so. Presently, right now, just so you guys know, I'm holding a small portion of the trade on. I'm looking for that objective here. And if I can get that, that'll be full profit for me for a day trade. I get a lot of questions by way of email. Am I going to be teaching swing trading? Am I going to be doing position trading? Am I going to be teaching options? The only thing I'm promising you live sessions with and working with you until December or so is day trading. If this doesn't fit your interest, I understand. I'm not here to twist your arm, but that's all I'm going to be doing. I'm not teaching mentorship stuff, so you got to take what you get. Okay, I promise what you get from me is very useful, and it'll help you whether you're a long-term trader or not, because it can give you really good entry techniques regardless of what type of trader you are. All right, so the first thing I want to talk about this morning is the fact that we have the market. We're trading on a Tuesday. Generally, Tuesday is a really pretty good day in terms of directional bias and moving one-sided. Now this morning, or overnight rather for me, London was a little bit lethargic. I was wanting to see a little bit more energy in it, and it hasn't produced it yet, but now we're in the New York Open. Okay, and I'm getting a lot of folks asking for this indicator down here. I don't want to promote the idea that you need it. You don't need it. Okay, they're just little tools, and many of them have been created for me by my students. I don't program these things. I couldn't program an MT4 indicator to save my life, to be quite honest with you. But you don't need them. Okay, all you need to know is how to bracket them in terms of when they begin and when they end, and I'll cover that. It's not important now because it's all in the tutorials. So the question I'm sure is just, why is this entry here? You know, why did I enter here and maybe not, maybe over here, or maybe over here, or maybe even here? Okay, or why not right now? Well, right now would be a potential scenario for the New York Open, looking for a run on the overnight highs. Okay, but I want to talk about what leads to this entry, why I felt it was there, and also how to anticipate optimal trade entry. Because, like I gave you examples last night with Aussie dollar, I gave you examples with the euro dollar. Now I'm going to give you what I saw that led to this entry here. And truth be told, I did a recording while this whole thing unfolded. It's going to be sped up. It'll be part of the recap that I gave you guys on YouTube. It's very, very generic. It's not a whole lot of bells and whistles on the presentation because, frankly, I put the trade on and I went to sleep. Okay, I didn't worry with it. I let it go on autopilot. So I'm going to teach you a way where you can not have to be up during London Open, because there's a lot of folks that get scared when they're like, okay, I have a job, I can't be up ICT, I can't do it. You know, but I want to trade it. I see there's opportunity, but I can't do it. Yes, you can do it. There's no excuse why you can't do it. I'm going to teach you one concept on how to do it. There's lots of them, and there's lots of different nuances that goes along with increasing the profitability and probabilities for these setups, but that's all mentorship stuff. Okay, and I hate to sound like I'm dangling a carrot, but I want to make sure we're making a very clear distinction about what you're learning and what you're not going to be learning. Okay. The tutorials that will be populated on this forum, they'll teach you 95% of everything that the folks in the mentorship learned. That last 5% was just simply having me point to it, talk about it, and give things that I'm not going to talk about in public. Okay, so do you absolutely need that last 5%? In my opinion, I don't believe you do. But it was made available for folks, so it will not be made available in the future, so please don't ask me about the mentorship because it's not going to be there. Okay, all right, so we're going to talk about this entry here, what leads to future optimal trade entries, how to anticipate them. Okay, and we're going to go over to another chart right here, and I'm going to go over how the daily chart is a gold mine. Okay, and you have to understand this particular time frame. If there's any one time frame that I think is the most important, it's this one. You want to be able to determine what the banks are going to be identifying. And you see a lot of folks on YouTube lately. Everyone knows something about the Forex market. And I don't claim to be an expert. I don't claim to be the Forex god. I get a lot of folks that say those types of things, and I don't really encourage that. Because I make mistakes just like anybody else. I'm not perfect. I mess it up. And frankly, you're going to mess it up too. All you need to know is where the probabilities lie with future setups. And you need to be able to take those setups with no fear, no nervousness, and just dial in on what it is you're looking for. You find that on the daily chart. Now, obviously, the daily chart is really slow. And if you're a day trader and you have not learned to view the market like this, it just seems like this is not the type of time frame you should be working with. You should be watching the 1 minute or 5 minute chart, and that's a problem. That's an error. I made those same problems and errors when I first started as a trader back in the 90s as a commodity trader. But I want you to look at this crude depiction here, okay? And we're going to work with this diagram. I'm going to show you how I identified the setup and how you can anticipate these things going forward. So we can go from the live session today and start using it right away. So we're going to illustrate here with this, like a swing high. And a swing high is any time where we have one individual candle, or in this case I'm using open, high, low, and close over here. So these are called open, high, low, and close. I'm using it just simply to illustrate with a greater clarity what you're looking specifically for. Now, it can be illustrated with a candlestick, but for teaching purposes, and because this is how I internalize a candlestick anyway, I want you to be able to see it like this, okay? But to understand this, it can be viewed in the same conceptual manner with a candlestick. But we have a high, and this is representing individual days on a daily chart. Okay, so this is one particular trading day, this is another trading day, this is another trading day. Whenever we have a swing high, okay, in the old days we called them ring highs before we had computers. We'd actually draw a little circle around that, denoting that was a short-term high. And the market may sell off and have a measurable decline at a future time. When we have this, okay, when we have this swing high, you want to be looking at the previous day's lows. Okay, for instance, this one here, we watch price trade through it and it closes below it. When we have that, we know that the next day, that same scenario is probably going to repeat itself. So you just take your attention and focus it on the previous day's low right here. Okay, what's going to be residing below that is going to be liquidity. Okay, it's going to be new orders. It's going to be traders that want to trade on a breakout, selling short. All you're doing as a trader is you're trying to interpret what prices leading you to believe based on market sentiment. Okay, market sentiment is what the opinion is about the marketplace right now. Does it have a bullish stance to it or a bearish stance to it? And what you're looking for is how to blend that with what may be existing in the marketplace in the form of orders. Now, I don't personally believe that there is a good way to interpret where orders are in the Forex except for understanding price action, because you're never going to get the vast pool of liquidity visible to you, in the sense that, like, if you watch a futures market, you can look at things and tools that will give you a good idea where buys and sells and existing orders may be coming into the marketplace, which is where market profile and depth of market, those types of things, while I don't subscribe to the opinion of that, I think they're more useful in those types of markets. For Forex, forget about it. You're not going to get it in Forex because you're not going to be able to see those orders coming in. It's too vast of a marketplace, and it's no centralized way of drawing all those orders in. So we have to internalize where these orders are and where they would be residing. And that's going to be above and below daily highs and lows. In other words, below the previous day's low and above the previous day's high. So if we have a turning point potentially in place with a swing high, that means one high with a lower high to the left of it and a lower high to the right of it. Once this is seen in price, you already know what you should be looking for. It's that quick. It's that easy. You should not be looking at your charts for 45 minutes and waiting and staring at, trying to determine what it is you're trying to look for. When I look at price, I look at it in terms of market structure, and this is the first element of market structure I'm going to teach you today. Okay, it's a very simple approach. Look for a swing high or look for a swing low. So right now, as soon as we have this scenario in price, we would be looking for orders to be tagged or reached for below this particular day's low. Now I'll give you an example of what that would look like. You have a candle here or a daily bar. These little tiny little ones here, these are Sundays. We're going to try to forget them. This platform or this demo includes Sundays. I wish it didn't, but it is. So we have a high here that's lower than this one, and then the next candle or bar is here. So this is a swing high. So the orders are going to be below this particular day's low. So as a trader, we would look for the market to want to reach below that low, and it does that right here. Okay, and as long as we do not move back above the swing high or a lower swing high, which this becomes another swing high. One high, lower high, lower high. But notice how each low keeps getting tagged below the previous day's low. This is the beginning and building blocks of understanding daily bias. Man, if I could tell you one question that comes by way of email all the time is, if you could just tell me how to know what day is going to go up or down, what's the direction, I could use your tools and make money. Well, you wouldn't, okay, because there's so many other things to it. You think that's what it's all it's necessary, but it's not. Okay, price will teach you to chase things that really aren't there. So I'm giving you basic framework here. It's a very simple concept. Do not discount this, because I'm telling you, I use this almost every single trading day. And I'm showing you, look how many times there's setups there. And I'm not talking about in hindsight. I'm not putting lines on the chart and moving them around. You're seeing the actual orders in. You're seeing the results of the orders. You're seeing the timestamps on the orders. It's there, just like that, okay? You can see that, okay? So the bottom line is, you need to know where the market's going to be drawn to, okay? So when we have a swing high, we want to look for the lows to be taken and reached for. We have another swing high here, okay? When that candle or daily bar finishes, the next day we're going to be looking for price to reach below that as well. It does that, okay? Irrespective to where it opens, I don't care about that for right now. I just know that the market's going to be drawn to the previous day's low and go below it to some degree. I'm not teaching you how far it's going to go. I'm only telling you to look there, okay? So now, what do you think it is in terms of reversing that scenario? Well, this is how easy it is. If you have a swing low, okay, that's going to be in the form of a daily candle or bar that has higher lows on either side of it. Okay, so we have a daily candle or bar, another lower one, and then a higher one. So we have one day that has a higher low to the left and a higher low to the right. This is a ring low or swing low, okay? We don't call them ring lows anymore, but it's traditionally called now a swing high and swing low. This is a swing low. When we have this, the market's going to want to seek the liquidity resting the previous day's high. Once it's seen here, right here, I don't care where it closes, okay, I'm looking for this pattern, a low with a higher low to the right and a higher low to the left. When I know this, I immediately draw my attention to the day before's high. There's a strong likelihood that the banks will probe that area for liquidity. I don't care if it only goes up 40 pips and then fails and goes lower. I don't care about that, because if I can get 60 pips from my entry to a 40 pip run above the previous day's high, that's enough for me to profit. And that's all you need as well. You may not want to be a day trader. You may not like the idea of a day trader, but that's the most frequent setup. It's always there. Every single trading day, there's a trade every single time. Now, I'm not telling you this as new traders, if you're listening, to entice you to try to do this every single day. I'm just telling you, I've been doing this for 24 years now. I can read price. I can see things that you won't be able to see without a long period of study. My hopes are that you'll see that there's an opportunity there to be looked at and studied, at least a handful of examples over a course of a month. You can carve out a career just doing that, and using alerts on an app that goes along with your trading platform. And a lot of demo accounts can set up alert systems and like send you a text message when a particular level is hit. That way you can go in and start looking for it. On the optimal trade entry primer video, I gave you how to look for a higher time frame level, wait for a market structure break or short-term high when it's bullish, and then wait for that retracement to catch a buy. Reversing it for selling short when you have a higher time frame resistance level, wait for price to break a short-term low. That's a market structure break on the downside. Wait for the retracement, sell short. Okay, very simple, very, very generic. Now, by itself, you can get in a lot of trouble with it, okay, because you have to understand some things. This is what you need to see to help you along with that basis. That original concept of market structure, retracement, look for expansion. What I gave you in the optimal trade entry primer video, this is the missing piece that you need for bias. Notice that it's not moving averages. It's not all kinds of indicators. It's simply reading raw price action. There's so many things out there that's going to try to get your attention and try to draw you away from looking at just this simple concept. There's 4 things you need to worry about: the opening price, the high, the low, and the closing price of any time frame you're looking at. What time frame is the most important? The one you're staring at right now with me, the daily. Now, if we know that this is what most likely is going to occur on the banking horizon, in other words, what the banks are focused on, where do they want to take price? This is what they do. Now, I'm not here to get in an arm wrestling match. You can go on Twitter and arm wrestle me and tell me, I don't know what I'm talking about. But look, you haven't been where I came from, and I know this stuff like the back of my hand. And if it isn't true, then how am I able to do it? Because it's not indicators that's doing it. So all I'm asking is, if you're on the fence about it or about me, just look at the information and you make the decision on that. Okay? Who cares about me? It's not about me. Okay? So now we have this pattern right here, the swing low. Well, we have a candle or daily bar here with its low here. The next day it's here, which is last Friday. And then we have the Sunday candle. So you got to dismiss the Sunday candle, like pretend it's not there. If you can get a demo account that has a dollar index and doesn't have Sunday candles, man, you got a gold mine. That's wonderful, because I wish I could get the Sunday candle out of this particular demo. But the next candle has a higher low here. So we have the low, the higher low, and the higher low. So what is this? A swing low. So now what we're doing is we're looking for the liquidity above the previous day's high. That's yesterday's high. That's right here. So the high comes in at 131.87. So I know that there's a strong likelihood that the market's going to want to probe above that previous day's high. Why? Because the banks are going to want to offset their buying, because they bought down here. How do I know that? Because price moved. Price moves to allow deep pocket entities to be able to do those types of things. Now, again, this is not an invitation for you to argue with me, okay? This is my personal belief. You're never going to convince me otherwise. You don't need to subscribe to that view. If you want to look at this as something entirely different, go right ahead. I'm not going to try to change your mind about it, okay? But the market will look to go above that previous day's high, and again, the price level is 131.87, okay? So now we're going to go back over to the concept of power 3. That means that we want to be near the opening price, at the opening price, or below the opening price. Okay, if we're going to be long, we want to be getting as close as we can to that opening price at the beginning of the day, which is 0 GMT, or in this case, it's 8 p.m. New York time for me on the east coast of the United States, and then, or at midnight. And this is all in the tutorials. There's nothing mentorship here. It's just very generic stuff. You saw me do this for years and years on Baby Pips and on my YouTube channel. So we're going to go back over to the intraday chart here, and I'm going to ring in the Asian range. Okay, so we have the Asian range, yesterday's or last night's 8 o'clock starting, which is 0 GMT for me in this platform. And this is the high for the Asian range, and this is the low of the Asian range. Now, if you can't be up for London, no problem. If you get your entry inside of the Asian range, if you have a bias, what's the bias? The markets want to most likely go above the previous day's high. Okay, the previous day's high. Okay, is right in here. Here's previous day's high. And we know that there's going to be liquidity resting right above that high. What is that? It's going to be buy stops. Okay, why is it buy stops? Because someone sold short there. See how easy that is? Very easy. So what we're doing is we're seeing, okay, there's going to be a target on those individuals that had made money here. That's all this business is, folks. It's about taking from the next guy or gal. So inside the Asian range, I knew that there was a strong probability that this liquidity would be targeted. I wanted to be long. I didn't want to be up for it because I knew I had to be here with you guys. Not that that's not a good thing. It's just I'm tired. So I don't want to be up. So I'm pulling a lazy man's approach last night, and I just went in during the Asian range, and right after I got my bias confirmed. I looked at the market around 12:30 or so, which is my daily routine, and I knew that I wanted to be long. I put a reasonable stop loss in, okay, and price did exactly as I would expect it to do. Target the liquidity resting above here. Now, As a go-to rule of thumb, I teach that 10 pips and 20 pips is the usual grade of sweeping above or below a previous day's high. Okay, and we're going to look at that real quick. Here's the high, and I'm going to give you two scales, 10 pips off that high. Okay, there's 10. And 20 right there. Okay, and you'll see over time, I'm not trying to convince you of it just today, but anyone that's gone through my tutorials will know this is something I teach in those, and it's not just cherry picking and form fitting for the approach that's being shown to you today. So here's 20 pips, really, really close, and it might not be done for today. It might go one more time through it, but look how close it takes you. And now, again, these are just ballpark figures to reach for. Above the previous day's high, 10 pips, 20 pips, because price moves on an algorithmic basis. Okay, it's not what you think that makes price move. And as we talk more over the next coming weeks, I'll give you some more insights about that, but not everything, but certainly enough to make you dangerous in the marketplace. Okay, so we have two grades of targeting. How far do I think the market's going to go? That's the same rule that's been there since the tutorials, and here it is today, almost true to form. You can't get any closer than that without actually hitting the level. Look at that. I mean, it's just literally almost right there. I always try to exit early. My weak point as a trader is my exits. I cannot perfect that enough, and I don't think I'll ever be perfect. Okay, it's going to be a pursuit that never is satisfied. Now, I want you to look at this price action and see what you see in terms of what I taught for optimal trade entry. If we look at price and add the fib, now obviously this is on a 5-minute basis, but nonetheless it'll still accomplish the method. Bodies of the candles up to the highest portion of price on this price leg here. So it's this close and this open. Price comes down, optimal trade entry. This is the London open kill zone, okay, as I define it. So as price hits that, if you were up at London, that's what you would be doing to get entering on long, okay? Price would then responds well, expands, and what's it do? It reaches for 10 pips above. Look what it does. Sweeps just a little bit above the 10 pip grade swing, and then retraces back down to previous day's high, gathers more orders, expands again, and just falls short of the 20 pip swing that is outlined. Okay, so I believe that we're probably going to see another leg higher intraday today, and if we do, we'll be looking for a little bit deeper run on liquidity higher than that, and I got it in the form of this exit point here. Okay, so let me see one more time. Yeah, the take profit is at 132.23. Okay, so that's the level I'm looking for. Really, 132.20. I like that idea. I'm just trying to get that 3 pips above it. And if I get it, great. If I don't, most of my positions are already off because I don't know if I'm going to be right. So I take partial profits because I want my bottom line to increase. So I teach this in a demo account because if you don't pay yourself, no one's going to do it for you. Your broker's not going to do a favor for you and say, well, you know, she's been trying really hard the last couple of weeks, and let's just give her, you know, a bonus. Let's take her out of the good profitable exit. They're not going to do that for you, folks. It's just not going to do it. So you have to have ways of doing that. And if you look, again, let me put that back up here real quick. This is on a 5-minute basis. We're going to drop back out to a 15-minute basis. This is what I would use for my optimal trade entry projections. And zoom in one more time. And bodies of the candles. Right there. There's the symmetrical price swing. I'm trying to get out early, but I woke up this morning, and you'll see the recording. It comes to life right about here. I adjust the stop loss, and I take out a portion of the profits, and then I took another portion off here as well. So it's here, and I have a small portion still remaining in the trade, and that takes us up to there. If it goes beyond that, I don't care. I don't care about that. As a day trader, I'm looking to take surgical strikes, get my pound of flesh, and then move to the sidelines. Okay, but the main thing I want you to have as a takeaway is I want you to go through price action and find on the daily chart every time there's a swing high forming how it targets the previous day's lows. Okay, and when we have swing lows, I want you to study how the market seeks the liquidity above the previous day's highs. Okay, and start doing that not just in one pair and not just in Forex. Look at it in stocks, look at it in bonds, and dare I say it because I don't know anything about it, Bitcoin. It's always there. Market makers use the same business model. It's always the same stuff. So if you understand that the markets move on the basis of seeking liquidity, drawing in traders on the wrong side of the marketplace, or knocking them out to take their position over, that's what a market maker's role is. They facilitate that requirement for smart money. They themselves aren't smart money. There's a lot of talk about what market makers are doing, and market makers do this and don't do that. They are a facilitator. They allow smart money entities to position and move in and out of the marketplace. Okay, and I'm not going to say anything more than that, but long and short is you've been given something very precise today, a very user-friendly approach. It's not complicated, and if it's gone over your head, just watch the video and the recording when it goes on YouTube. It'll automatically compile and be there. But I promise you, if you study price action on a daily chart, look for this, you will see every single trading day there's something there. So if you subscribe to some other group or mentorship or some program, you can cancel that now, and now I've given you a complete life's career and approach to finding setups every single trading day. You want to make 25, 30 pips a couple times a week? This is how you do it. You want to make 100 pips a week? This is how you do it. If you want to just consistently find setups, this is how it's done. It repeats itself almost on a day-by-day basis, and the only times it doesn't work is when you get an inside day. An inside day is, let's see if I can find one here. Here's one here. The day's high and low, the low is higher than the previous day's low, and the day's high is lower than the previous day's high. That's the only time you're not going to find profits or an opportunity. So what? How many times are you going to get an inside day back to back to back? It doesn't happen a whole lot. But one good thing is when you do get an inside day, you're going to see the volatility expansion, which means it's going to be a big day. That means it's going to be a big day like here. See the next very day? It's big range. So if we're going to be seeking liquidity below the lows, don't anticipate just a little bit of run, anticipate a big run. And now you just found out how to make explosive moves in price action, or at least find them now. So hopefully you found this one insightful, folks. I'm going to close this one. I'll catch up with you guys later on in a real quick short recap video. And I'll be back with you guys tomorrow around 7:30 with a little bit longer session. Until then, I wish you good luck and good trading.